Hello, I'm Ron Wilson. In this month's news, changes to the federal government's superannuation taxation reforms have now received royal assent. Australia secured an exemption on the proposed US tariffs on steel imports at last month's G20 summit. The tariff is in response to a worldwide glut of steel. ANZ and Westpac have successfully trialled the transfer of guarantees on commercial property leasing via blockchain. And in international news, US jobs growth in June exceeded forecasts with more than 200,000 new jobs created. Michael Pollock has the details.
Amendments to maintain the integrity of the federal government's superannuation taxation reforms have come into effect with the passing of the Treasury Laws Amendment Bill through Parliament. The pursuant Act received royal assent on the 22nd of June. In an accompanying statement, Federal Minister for Revenue and Financial Services Kelly O'Dwyer said the reforms aim to improve the fairness, sustainability and flexibility of the superannuation system, including ensuring recipients of an existing structured settlement or personal injury order do not pay tax on their superannuation income streams as originally intended, and supporting the integrity of the new transfer balance cap by including a repayment of a borrowing under an LRBA in the cap in certain circumstances. The allowance of paying off borrowings under LRBAs entered into on or after the 1st of July will help cover the change in value that occurs when liabilities from an LRBA are paid using assets in the accumulation phase. Australia secured a valuable exemption on US tariffs for steel exports at last month's G20 summit in Hamburg. The US has mooted the imposition of a tariff on steel imports in response to a global glut that was adversely affecting its domestic steel industry. Trade Minister Steve Chiobo and Australian steel manufacturers BlueScope Steel and Rio Tinto had also lobbied for exemptions on steel and aluminium exports days earlier. In other trade developments to emerge from the G20 summit, Australia also secured a bilateral trade deal with Indonesia to be concluded by the end of this year and agreed to finalise a free trade deal with the EU by the beginning of 2019. The ANZ Bank and Westpac completed a successful trial of blockchain in July for guarantees on commercial property leasing. The trial was conducted in conjunction with IBM and Scentre Group, owner of Westfield Shopping Centres in Australia and New Zealand. Blockchain technology involves a decentralised database which serves as an online ledger of transactions that cannot be changed. The fact that each computer in the network, or blockchain, has its own copy of the database means there is no centralised database that can be hacked. All blocks in a blockchain contain the digital fingerprint of the preceding block. So, if a block is hacked, all members of the chain are alerted, as the fingerprints will no longer match. In the ANZ Westpac trial, blockchain technology was used to replace the paper-based guarantee process with the aims of reducing fraud and overcoming inefficiencies in relation to physical document management, tracking and reporting, and lack of standardisation. US employment figures released in July revealed that 222,000 jobs were added to the economy in June, exceeding forecasts by around 40,000 and rising from 138,000 jobs in May. Healthcare, food services and mining sectors in particular showed large gains. This rise represents the 81st consecutive month of jobs growth in the US. Despite the jobs growth and an unemployment rate of just 4.4%, wages growth remained a problem, rising just 2.5% year on year. Adjusted for inflation, real wages growth was nearer to 1%. The jobs growth in June has increased the likelihood of the US Federal Reserve raising interest rates again this year. The Commonwealth Bank has joined ANZ, NAB and Westpac in lifting its interest-only mortgage rates to comply with tighter regulatory requirements around residential mortgage lending practices applied by APRA. CBA raised its interest-only rate by 0.3 percentage points on the 7th of July to 5.77% for owner-occupiers and 6.24% for investors. APRA has demanded that banks reduce the proportion of interest-only loans to less than 30% of their new loan portfolios in response to an environment of heightened risk through low interest rates, steep housing prices, substantial levels of household debt and subdued wages growth. CBA's 0.3% rise in its interest-only mortgage rates matched ANZ's, with Westpac lifting by 0.34% and NAB by 0.35%. ASIC issued a legislative instrument in June to temporarily extend the time financial advisors have to provide retail clients with an SOA for urgent superannuation advice. The instrument will provide temporary and conditional relief from the requirement under the Corporations Act to provide an SOA when or as soon as is practicable after advice is provided to a retail client. The temporary relief allows advisors up to 30 days to provide an SOA to a client when personal advice about a superannuation product is provided. ASIC has clarified its position on the use of terms such as independently owned under Section 923A of the Corporations Act. The regulator stipulated that financial service providers can only use certain restricted words and expressions if they do not receive commissions, volume-based payments, or other gifts or benefits, and operate without any conflicts of interest. Section 923A already restricted words such as impartial, unbiased, and independent. However, there was lack of clarity around wording such as independently owned, non-aligned, and non-institutionally owned. These and similar expressions are now permitted if the advisor satisfies the conditions of Section 923A.